everyone, welcome back to this week's Manager's Thoughts, coming to you from Kelly at Synergy Asset Management. So let's get right into it. I wanted to give you all a brief introduction to myself. So hi, I'm Kelly Chandler. I am super excited to have recently joined the Synergy Asset Management team as a financial analyst, and I will be giving some of these weekly market updates. So super grateful for you all tuning in. To start off, as a quick market update, equities have been on the downward trend while yields have been spiking this week. And so on Thursday, we saw markets close lower with the NASDAQ at 11,500 and the S&P at 3,900, while the U.S. Treasury 10-year yield was at 3.45%. And so that left the NASDAQ down over 7%, the S&P down over 6%, and the yield on the 10-year U.S. Treasury up over 2%. So moving on to the recently released inflation data this Tuesday, the U.S. Bureau of Labor Statistics posted inflation at 8.3% year over year and plus 0.1% month over month, which completely shattered expectations of 8.1% year over year and negative 0.1% month over month. And so you can see in the chart below, yes, inflation is coming down. However, it's not coming down nearly as quickly as economists and the Fed are hoping for. Following the surprise in CPI early Tuesday morning, markets took the single largest day hit since June of 2020, with the Dow Jones Industrial Average falling 3.9%, the S&P tumbling 4.3%, and the NASDAQ Composite diving 5.2%. Although inflation has been the main catalyst of this week's market movements, next week we're going to see a lot of the market movements depend on the September 20th to 21st Federal Open Market Committee meeting, where they're going to meet, announce the next rate hike, and we will see the volatility come from there. And so most analysts are estimating a 75 basis point hike. However, now some of them are moving their estimates up to 100 basis points in reaction to this discouraging inflation data. Moving on to some news that we got on early Friday. On September 16th, FedEx Corporation, their shares sunk more than 20% after the CEO announced a $500 million cut to sales forecasts. During an interview Thursday, he expressed his concern for a looming global recession as the company is facing decline in freight handling demand worldwide. And so it's no surprise that with the CEO's sentiment and their upcoming earnings next week, investors are quickly pulling out of the plummeting stock. The bigger issue is that FedEx might be one of the first companies to be really dealing with this drop in consumer demand, which is another strong signal for a possible global slowdown. In that same sentiment as the FedEx CEO, this week the World Bank Group released a report cautioning the likelihood of a global downturn. The organization believes that the rate hikes and other policy actions globally were good, however, they may not be sufficient to bring global inflation down to levels seen before the pandemic, citing that the global economy is now in its steepest slowdown since the 1970s. More specifically, you can see the World Bank Group's president, David Malpass, who said, "Global growth is slowing sharply, with further slowing likely as more countries fall into recession. My deep concern is that these trends will persist, with long-lasting consequences that are devastating for people in emerging markets and developing economies." Paired with this warning from the World Bank is the University of Michigan's Consumer Sentiment Index, which came out this Friday. It increased slightly month over month from 58.2 to 59.5, which seems hopeful. However, this is nearly a 25% decline year over year from September of 2021, when the index was at a healthy 72.8. So what are we doing here at Synergy Asset Management in reaction to all of this? Well, we're constantly watching the news about inflation, the upcoming rate hikes, and corporate earnings as we head into this next earnings season in early October. For each of our portfolios, we're always monitoring and using these economic updates to manage each portfolio per its mandate and its nature to best take care of our clients. Thank you for tuning into our Manager's Thoughts update this week, and we look forward to providing another update next week.